Now speaking, Justin Fisher, Director, Investor Relations. Doug Howe, Chief Executive Officer of the company, began by saying that the company had issued a press release comparing results of operations for the 13-week period ended April 29, 2023 to the 13-week period ended April 30, 2022. He noted that the financial results referenced during the call excluded certain adjustments recorded under GAAP unless specified otherwise, and that a complete reconciliation of GAAP to adjusted earnings could be found in the press release. Howe also warned that any remarks made about the future expectations, plans, and prospects of the company constituted forward-looking statements, and that results may differ materially due to various factors listed in today's press release and the company's public filings with the SEC. Joining Howe on the call was Jared Poff, Chief Financial Officer. Now speaking, Doug Howe, President, DSW. Designer Brands Incorporated, DBI, experienced a 10.7% decline in net sales compared to the first quarter last year, despite the strength of fashion in the same period of 2021. This was due to the broad-based pressure on consumers and a more promotional environment than anticipated. U.S. retail store traffic was up 22% in the first quarter of 2021, but this was not enough to offset decreases in dress and seasonal businesses. DBI saw strength in the casual category with women's up 7% and men's up 4% in the quarter compared to the prior year. To mitigate the impact of changing consumer preferences, DBI increased its promotional drivers as they moved through the quarter. U.S. clearance business comps were at 5% on a net basis during the quarter compared to last year. DBI is continuing to make progress towards its strategy of doubling sales of own brands from 2021 to 2026 while editing and amplifying with top national brand partners. Keds, Le Tigre, and Topo Athletic have all been acquired in the past year and are expected to help fuel growth for total DBI and provide a diversified complement to DBI's dress and seasonal powerhouse brands. In addition, DBI is working on closing an agreement to become the exclusive licensee of the Hush Puppies brand in the US and Canada. DBI has also seen success with several of its legacy-owned brands, such as Lucky, which saw women's sandals up 10%, and Crown Vintage, which had a successful celebrity partnership with Emma Roberts. Vince Camuto and Crown Vintage have also seen encouraging results in the men's space, expanding their assortments beyond dress. DBI's e-commerce performance across many of its brands shows solid growth compared to last year, with VinceCamuto.com delivering an 8.3% comp. DBI also engaged customers through events, such as Lucky Brand's Desert Mirage-themed event at Coachella, and Vince Camuto's Ciao Bella Festival fashion experience. Given the softness in the quarter, DBI is lowering its sales and earnings guidance for 2023. They remain cautious about the balance of the year due to macroeconomic pressures and the importance of the first quarter as one of the two biggest selling periods. However, they believe these trends are temporary and expect to see improvement later in the year. Now speaking, Jared Poff, Executive Vice President, Chief Financial Officer. Summary: the company reported a challenging first quarter due to constrained discretionary consumer spending, inventory tightening in a highly promotional retail environment which resulted in a 10.7% decrease in sales to $742.1 million compared to 2022. Total retail comps were down 10%, U.S. retail comps specifically were down 12%, and Canada had a strong quarter with comps up 3%. Gross margin was 32%, down 120 basis points from last year, but 230 basis points higher than pre-pandemic. Adjusted SG&A was 28.9% of sales, and adjusted operating profit was 3.5% of sales. Adjusted net income was $14.3 million, or 21 cents per diluted EPS, versus $36.7 million or 48 cents last year. Inventories ended the first quarter with $637.4 million, down 4% on a retail square footage basis, and wholesale inventories ended the quarter up 15%. The company has updated guidance for adjusted EPS of $1.20 to $1.50 per share, assuming sales at U.S. retail segment down mid-single digits to last year on the high end, and high single digits on the low end. Additionally, the company announced a Dutch auction tender offer of up to $100 million in value of its Class A common stock at a price between $7 and $8 per share. UBS analyst Jay Soul inquired, "Can you provide more detail on the elevated partnership with Nike? What is driving the increase in sales that were previously at 6 to 7% of total?" Doug Howe replied, "Yes, Jay. Thanks for the question. We are thrilled to be partnering with Nike again in Q4, offering our customers men's, women's, and kids' apparel. We have had ongoing dialogue with them for months and we look forward to leveraging their expertise to build our business across stores and digital. With our number 3 market share penetration in women's apparel, this is a great opportunity for both of us. We plan to evolve our portfolio with them and other partners moving forward." UBS analyst Jay Soul inquired, "Can you discuss the trajectory change in your business for Q2 and what factors have led to an increasingly promotional environment?" Doug Howe replied, "We are seeing strength in the casual category, as the casualization trend continues. Across men's, women's and kids' clothing, results are similar. This suggests customers are being more discretionary with their income. We are taking measures to control promotions and leverage our value proposition. Demand is tempered, but we believe that will improve as we move through the back half of the year. We are managing inventory well and launching a new fall marketing campaign. Additionally, we are excited to launch our own brand Le Tigre in the athletic space and elevate our partnership with Nike." Doug Howe replied, "Thank you for your question. We are excited to continue elevating our national brand portfolio through the partnership with Nike, and in August we will be launching Le Tigre, a first for us in the athletic space. I'd like to express my thanks to our team and brand partners for their hard work and dedication. Lastly, thank you for joining us today. We look forward to updating you on our progress in the next quarter."